Hello everyone, so I begin with question 1A, calculation of goodwill on acquisition for Mas Berhad. It is investment from subsidiary to subsidiary, which is from 80 to 90%. The goodwill will be calculated based on the first acquisition. So first, we have consideration transferred 490 million is investment of a COG in Mas Berhad. This figure included debentures of 100 million, so it need to be deducted. So 490 minus 100, we get 390 million. Next, on NCI on first acquisition is 68.8 million, and this will be included in the analysis of financial statement for Mas Berhad. We got this figure from 344 times 0.2. 344 is from fair value of net asset acquired because this is partial goodwill. So on the date on acquisition, which is on 1st January 2018, share capital is 300 million. Retained earning 20 million, revaluation reserve 50 million, ARR per line 6 million, and lastly ARR for brand is 3 million. Then we have goodwill 458.8 minus 344, we got 114.8 million. Then less impairment by minus 3 million in each of year 2019 and 2020. Then we get the last figure of 108.8 million will be the goodwill to be stated in the state SOFP.
Sorry, I want to ask, why calculation of goodwill of Mas Berhad is based on first acquisition?
This is because the relationship between the investor and the investee is from subsidiary to subsidiary. When the parent acquires additional shares in a subsidiary, the controlling interest is treated as a transaction between the equity owners, that is, the parent and the non-controlling shareholders. Therefore, the previously recognized goodwill will not be adjusted to the new acquisition, even though the controlling interest increases. Next, move to the question 1B, goodwill of Tanjung Berhad. The first consideration transferred for Tanjung is 118.4 million, where 148 times 80%. This is indirect consideration transferred to a COG subsidiary, which is Mas Berhad directly acquired Tanjung for 148 million. Then we multiply with 80% as a COG has 80% interest on Mas. Then we got the answer 118.4 million. For fair value of net asset acquisition on 1st July 2020, the share capital is 200 million. Retained earning brought forward 4.5 million. Then we have current profit of negative 10 million, but it need to be multiplied with 6 over 12 months as it need the profit from 1st January until 1st July 2020. So the new current profit is loss of 5 million on the date of acquisition. After that, we get total fair value of net asset, which is 199.5 million. Then we times with 0.2 to calculate the NCI. 0.50 is get from 1 minus 80% times 60%. Then we get NCI of 103.74 million. Then total up the CT and NCI, we get 222.14 million. Then minus 199.5 million, we get the goodwill of 22.64 million ringgit. Also will be included into the SSOFP.
For question 1C, need to find the gain or loss on second acquisition of Mas Berhad. First step is cash consideration transferred 13 million, which stated in the question. Next, we need to find the fair value of net asset on second acquisition by total up share capital 300 million. Retained earning balance BF 102 million. Current profit 30 million and ARR balance BF 30 million, and we get 462 million. Why we don't take the total retained earning 128 million? This is because the date on acquisition is on 1st September, and we need to find the actual retained earning, which current year profit 45 million, need to multiply with 8 over 12. Then 462 million multiplied with 10% interest, which are caught in the second acquisition. 46.2 million need to minus it with 13 million. Total we get is 33.2 million, which is gain on second acquisition. At the same time, decrease in NCI. For question 1A, the consolidated statement of profit or loss and other comprehensive income for the year ended 31st December 2020. First item is revenue 800 million. For Tanjung's revenue, apportion 8 because date of acquisition is in the middle of the year. 10 million is from credit sold Mas to Akok, 6 million is from credit sold Akok to Tanjung. For cost of sale, we get negative 463 million. 1 million here is from loss on disposal of equipment. Another 1 million is unrealized profit from Mas. Loss on disposal 0. Investment income 3.5 million. Interest income 0. Administrative expenses negative 92.1 million. 0.1 million here is depreciation of loss on disposal of equipment. Selling and distribution expenses negative 74 million. Payment of goodwill 3 million. Share of profit from associate, which is Bunga, 5.6 million. Finance cost negative 70 million. Then we get profit before tax 160 million. Finance taxation 30 million. We get 30 million profit after tax. For other comprehensive income, surplus on revaluation 22 million. Gain on changes in shareholding, tax from the solution is C, 33.2 million, and we get total comprehensive income 185.2 million. Next, we need to find profit attributable to equity holder, which is Akok, NCI Mas, and Tanjung. For Akok, we get 121.34 million. For NCI Mas, we need to do working on profit after tax attributable to NCI. We can look here. We get 10.30 million for Mas, while for Tanjung, we need to do working in comprehensive income attributable to NCI, and we get negative 1.64 million. These three amounts will be used in the next solution consolidated changes in equity. Next, for total comprehensive income attributable to parent, we get 176.34 million. For NCI Mas, the profit earlier was 10.30 million. We need to plus with 0.2, which from ARR 2 million multiply with 10% interest. Why we need to multiply with 10% interest? This is due to since the revaluation took place on 30th November, which Akok hold 90% interest on Mas. NCI Tanjung same as above, negative 1.6 million, and we get the same amount as total comprehensive income 185.2 million. The loss on disposal of PPE and interest income are zero because they are intercompany transactions. In consolidated financial statement, we cannot recognize any gain or loss transaction between the parent and the subsidiary. That's why we need to minus it and the amount are zero. Thank you.
For the changes in equity, there will be general reserve, ARR and NCI. There will be also 10 elements included. Some of it we had fetched it from previous calculation. The elements that we fetched it is balance brought forward from working 3 that explained by Raja, acquisition during the year from question B explained by Izzati, changes in shareholding from question C, profit for the year from question D, current year impairment from question A, and preference share dividend for NCI from working 1 and 2 we added up. There are also elements that we took directly from the question that require no calculation at all, that is preference share capital of Mas and Tanjung from their search. We added up to surplus land of Akok Bahad and preference share dividend for general reserve. The only working that we need to calculate for this section is the surplus of Mas Bahad and the ordinary share dividend for NCI. For the surplus of land of Mas Bahad, we need to apportion accordingly to the percentage of NCI because of the Mas Bahad is their subsidiary. Then the ordinary share dividend from Mas Bahad is the interim and the final dividend. Finally, we add it up and the total balance carried forward shall be transferred to financial statement.
I will be explaining more on the analysis financial statement brought down. First item is NCI for Mas Berhad. So the value of 68.80 million we get from 20% times 344 million, which is the value from the calculation at competition of goodwill on A question, the VNA. And then Tanjung Berhad we get the value of 29.6 million we get from 20% times 148 million. And then for Mas Berhad return profit, the balance brought down 102 we get from the question. Retained earning REDOA we get it also mentioned on the question on the acquisition on 1st January, and then we minus and reallocated to GRE and NCI respectively. And then Mas Berhad ARR on 1st January also, the ARR DOA also mentioned just now, the mentioned at the acquisition on 1st January 2018. And Tanjung Berhad and return profit, the balance BD 4.5 million is already stated in the question. And the pre we also in the question, and then we times by 6/12 because it is started on July. So 10 times 6/12 we get 5. So we minus and should get 0 because there is no reallocated. It is mentioned on additional information number 5. And then the last item is the next item is Akok Berhad return profit, balance BD is 200%. It is also mentioned in the question. And the last item is ARR Akok, which is also mentioned in the question. So the total for GRE is 265.6 million, and the ARR is 72 million, and the NCI is 58.6 million. So all the value will be taken into the SOCE on Akok Berhad Group.
Alright, the last part in question 1 is consolidation statement of financial position for Akok Berhad as at 31st December 2020. First, under non-current asset, we have PPE of 1289.9 million. 6 million is ERR of land, 1 million is disposal of equipment, then 20 million is revaluation of land for Akok, 2 million for revaluation surplus of Mas. Then investment of Mas and Tanjung is 0. Investment in Bunga, we get 21.6 million. For RA, 3 million is need to be deducted for ARR of brand. Goodwill on consolidation is 131.44 million we get from total of goodwill of Mas and Tanjung. Next, under current asset, we have inventory where 1 million is from unrealized profit of Mas and another one from unrealized profit for Tanjung. Then trade receivable, 5 million need to be deducted as settlement of Akok to Mas. Next, we have bill receivables, 9 million we got from half of 26 million minus 4 of discounted bills. This also need to be deducted from bills payables. Lastly, bank, 13 million is from half of Tanjung bills payable, which is 26 million divided by 2. So the total of asset is 2025.94 million ringgit. For equity and liabilities, ordinary share is 720 million. RE, ARR and NCI is based on calculation in SOCE. Then 6% debentures, 150 million minus 159 million times with 8/12 months because Mas has recorded the first 8 months of interest. So we got 50 million. Then bank loan we got 278 million. Trade payables we got 84 million. For accrual, 6 million plus 4 million plus 5 million, then plus 3 million minus 6% from 100 million times 4/12 months. And lastly, for dividend payables, 20 million plus 10 million times 10%, where 10% is NCI direct interest on second acquisition. So the total of equity and liabilities is also the same with total asset, which is 2025.94 million.
Okay, question 2A. I will discuss the situation of the question first, and then I'll share the answer for the question. So the situation is Damia and Lisha, the worker, discuss application of MFRS 10, 11 and 128 for Mega Berhad. There are contractual agreement between Mega Berhad, which have 40% and the highest, and Terkia Berhad, and lastly B Berhad. So, can investment in Daily Berhad apply acquisition method and consolidated with Mega Berhad? Before see the answer, so we must know the MFRS first. So, MFRS 11 joint arrangement state that a joint arrangement is an economic arrangement whereby two or more parties have joint control. Okay, next, MFRS 10 consolidated financial statement, which is when an entity requires control over another entity, the acquirer is called the holding and the acquirer is called the subsidiary. And then for MFRS 128, which is investment in associate, equity method will be applied for accounting treatment of joint venture. Next, related to the case, a contractual agreement between Mega Berhad, Tekria Berhad and B Berhad enable them to jointly control Daily Berhad to do relevant business activity as they have unanimous consent of all the company that sharing in the control. So, since Mega Berhad already holding 14% of Daily Berhad, but it is not possible that the Mega Berhad has significant influence over Daily Berhad. This happened that the claim from Damia and Delisha is to completely consolidate Mega Berhad as per MFRS 10 is not valid. For this question, Daily Berhad need to be accounted for as joint venture or joint operation depending on whether Daily is legal entity or not. In this question, it is a simpler form. I'll just explain briefly simple situation. So the first situation, buy OSC of 40% of 100 million from Beach Berhad, and then Beach Berhad buy back or redeem back the 30 million from other markets. The relationship before is Port does not have a significant influence over Beach Berhad because it's already 40% and not over 50%. So it will treat Beach Berhad as associate and using an equity method. So after Beach Berhad redeem buy back 30 million of share, the relationship changed by Oak become a holding company and Beach becomes a subsidiary. So it is because after Beach redeemed the share, so the issue share capital was reduced to 70 million because 100 million minus 30 million. So remaining is 70 million. So now Oak has more over 50% because 40 million over 70 million is equal to 57.14%.
Is there any ways for a Beach Berhad to decrease the controlling interest of Oak Berhad?
Thank you, Izzati, for that question. Actually, there are ways for Beach Berhad to decrease the controlling interest of Oak Berhad. Maybe by increase the share capital. The way to increase share capital is by maybe increase new share issued, or maybe by paying up issue share in cash or in kind, or even maybe do a split share that will increase the share capital of Beach Berhad itself. By doing that, the controlling interest of Oak Berhad in Beach Berhad will decrease because there are increase of share capital in Beach Berhad.
Okay, we will start with question 3. For question 3A, first we should calculate the goodwill to be disposed because it is changes from parent to associate. So we need to calculate the goodwill to be disposed. In this table right here, as you can see that we had calculated the goodwill, and the goodwill to be disposed is 10 million that we shall transfer it to the statement to calculate the gain or loss. Okay, next, this is the table to calculate the gain or loss. As we had calculated here, you can see the disposal of Cucu Berhad will gain 30 million for he account, and for the group account there will get loss 10 million. Okay, move on to question 3B. The relationship between he Berhad and Cucu Berhad after the disposal is changes from subsidiary to an associate because he Berhad interest had been cut down from 10% to 40%, which made he Berhad lose control over the company. Okay, the question is, what is the minimum requirement for an investor to have power against the company? Okay, it is a good question. According to MFRS 10, an investor is entitled to an investee if they acquire more than half of the returns which means that they shall acquire the ordinary share more than half of it, so that they can have the power to direct the company, the investee company. Last one, question 4. For question 4, according to MFRS 10, none of them individually have full control over Great Berhad because they acquire not more than half of the company. As you can see here, that all of them acquire less than 50%. However, if they want to have control over Great Berhad, they should cooperate at least 2 investors. As you can see, the calculation here, if they cooperate 2 investors, there will be half of the shares that half of the return, so they can have power to make decision in Great Berhad. That's all. Thank you.